Hello friends and welcome back to my channel. Today we will be reviewing the fantastic remarkable week of October 2nd and how just two key zones from my free weekly plan shared on Sunday via Substack held the keys to success. In my perspective, my weekly plan stands as the cornerstone for anyone seeking profitability. I highly recommend taking a look and subscribing, otherwise you're undoubtedly missing out on an unparalleled track record. Last week was nothing short of fantastic for us as we accurately secured the pre-NFP high at 43.33 and the weekly low at 42.42. It brings me great satisfaction to witness how our Discord community not only profited but profited substantially. Here are my entries in SPX since I trade CFDs, which equal to 42.40s and 42.50s, pretty much the lows secured on Friday. For those of you interested in gaining access to my Discord, where I provide insights into my thought processes, share daily plans, make real-time trade calls, and offer educational content, simply click the link in the description box below. Use the code LEVELUP for an exclusive 20% discount. Let me clarify one crucial point. This is not a retrospective review. Instead, it's the result of the foresight analysis shared with you last week that highlights the pivotal levels where we indeed witnessed market turns occurring throughout the past week, namely 43.05s and 42.42. Without further ado, let's get to it. The weekly plan equipped you with 4 pivotal pieces of actionable information to establish a strong footing for the week. First, the support zone 42.22, 42.42, which accurately formed the week's low. The seller zone 43.02, 43.05, a zone where multiple rounds of selling occurred until the NFP breakout seen on Friday. The buyer zone at 43.22.27, offering a critical warning of buyers lacking interest. And lastly, the balance zone 42.62, 43.05, serving as the cornerstone of our weekly context. Let's begin by discussing the buyer zone 43.22, 43.27, which provided valuable guidance during the first leg of trading on Monday. To first shed some light on why this zone was chosen, apart from the numerous other confluences present, all of which I can't cover yet at the moment, but it's worth noting that this area corresponds to the August 22 swing high at 43.27. Invariably, markets tend to fiercely defend or use such points as magnetic references. The rationale behind this is evident when you glance to the left of the chart, revealing the potential extended downside if the markets were to find acceptance below 43.27 over a multi-week period. This is a prime example of market dynamics in action. Essentially, markets will do their best to hold in and around 43.27. A sustained failure likely results in a move down to 41.40s, 41.60s is what is then likely if a sustained move is formed. Returning to our initial clue that was seen on Monday, it's noteworthy how the Asia session remained below the high set on Friday at 43.70. Here's an intriguing tidbit. Since Friday, September the 15th, there hasn't been significant interest in pushing above the high set on Fridays. Watch this element moving forward, as this could potentially indicate a shift in market behavior next week or beyond. In other words, you're essentially watching for markets to find acceptance above Friday's high, something that has not been seen since 15th of September. Given that buyers continued to struggle for a second consecutive day to gain traction above 43.22, 43.27 on Tuesday during London session, The pivotal question then revolved around whether sellers could take control. Well, they indeed did. So when acceptance was found below the Asia low at 43.1, 43.14, 43.14 during the RT8 session, the next move in our books was pretty much sealed. This is the kind of market generated information and contextual understanding you need to cultivate in order to anticipate and participate in the major moves. In our trading room, we confidently entered a short position at 43.33, foreseeing the breakdown that was supported by intermarket confluence and the confirmation of buyers failing. This decision was also backed by the insights from our weekly plan that allowed us to capitalize on the clear vision seen on Sunday. Shifting our focus to Wednesday, we encountered another evidence setup where support came into play at the commencement of the London session, ultimately assisting us in locking in the week's low. The unique aspect of my plans and zones is that they're not contingent on specific conditions. Instead, they are automatic zones. This means that when you identify an extreme level and you have the opportunity to establish a position based on price action for a more favorable entry within the zone. Typically, we target a move of 50 to 100 points, which encapsulates the essence of the weekly support and likewise the weekly resistance. This precise strategy bore fruit by the end of trading week on Friday, where our support zone, essentially automatic zone, delivered a 115-point rally seen on Friday. Now, let's take a moment to consider a strategic decision. Why did I position a support zone approximately 20 points below the balance low? This might appear counterintuitive, especially when following the balance rules. It would suggest a short position on the balance breakdown. However, this is where foresight becomes pivotal. We anticipated a breakdown, but not just any breakdown, one that would ultimately fail, as you witnessed. These subtle nuances are the key to understanding my approach, allowing you to have a glimpse into my perspective and thought process. So why did I place support just below the balance low at 42.62? To begin with, it marked the pivot point for the breakout observed earlier in the year. Delving into the finer details would require a more in-depth discussion. So if you're interested in learning more, please don't hesitate to reach out via Twitter, DMs, or tweets. Meanwhile, the balance rules were in full effect, with 43.02, 43.05 firmly establishing itself as resistance from Wednesday all the way to Friday pre-market. This consistent control by sellers presented numerous opportunities for 40-point rotational trades, a classic example of the balance rules in action. You might be wondering, how can we confidently take short positions in this scenario at 43.02, 43.05? Firstly, it's important to note that markets rarely break out of balanced condition without a catalyst. With the NFP report scheduled for release on Friday, we had a strong inclination that sellers were likely to maintain control until proven otherwise. Secondly, the list framework confirmed shorts as well, providing an additional layer of confidence. If you folks are interested to learn more about the list framework, it's a simple 4-step framework, and if you're keen to learn more, just drop me a tweet or a DM and I am going to share the PDF with you. Lastly, ES rallied into resistance before the NFP release, a behavior we often observe ahead of key releases, and one we can rely on for guidance. What I mean over here is, we've often seen that markets tend to either drop into the release, into support, or rally into the release, into resistance. And that's when you get a favorable directional move. Something to observe during the next event if such an opportunity arises. It's worth highlighting that after numerous tests at the top, which is 4302, 4305, one undeniable fact emerged. Any upward movement would likely result in a break. Whether this break would be sustained or not was a secondary concern because repeated challenges weaken a zone's resilience. Now, let's shift our attention to the NFP price action. Once again, we witnessed the weekly support holding firm, reclaiming balance on a 15-minute, 30-minute time frame. According to the principles of balance rules, this indicated that sellers were unable to maintain traction below the balance low, that is 42.62. This failure led to a complete rotation back to the top at 43.05, and given that I just covered that this zone was already weakened, resulted in a breakout. Now, a key fact to remember, the markets had a 21-point balance breakdown failure. Often we've seen these moves mirror to the upside, which meant any breakout would at least see a 21-point breakout, which precisely aligned with our buyer zone 43.22, 43.27. Is that a coincidence? Well, we don't believe so. Subsequently, ES followed up with a textbook list framework confirmation at 43.27, which ultimately rallied into 43.55 and 60s. That concludes our review of the trading opportunities from Monday to Friday, all of which were extracted from 4 distinct locations outlined in the weekly plan. Throughout this process, we emphasized the significance of market structure, context, pattern recognition, and assessing market behavior to engage at locations with favorable odds. As demonstrated, this approach yielded positive results. If you're interested in delving deeper into how I select these levels beyond the brief insights shared in this video, I invite you to explore my Discord channel where I provide transparent and detailed explanations to my methods. Ladies and gentlemen, it's essential to grasp that you don't require complex indicators, tools, or signals to recognize these patterns. They are right in front of us, yet often overlooked by most. By keeping it simple, just as we do, I'm confident your results will surpass your current performance. Until next time, HBIR is signing off. See ya folks, have a good weekend.